What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I, Dave Bartosiak, dig on through the macro charts of the day and give you 5 Zacks Rank #1 strong buy stocks that are on the move, that is breaking out from 52-week highs. So definitely want to stick around for the end for those. But first, the S&P 500, something we've been looking at a lot, of course, because you're supposed to. It's the S&P 500. I've been playing off of this sort of fib here, April lows, mid-May, and then we saw the fib extension, the 1.618 extension. Don't want to dig into that too much, but thought I'd mention it. Now, if you could see past all these lines, I don't want to get rid of this. I want to leave this here. But there was this little nifty downward trend channel that was developing on the S&P 500. Good news is, big gap up, we're out of there. Starting to push higher, all-time highs definitely within striking distance. So keep an eye on those all-time highs. That's essentially the next stop here for the S&P. Crept a little bit higher today. Wasn't a ton of movement to the upside, but upside nonetheless, a little bit of follow-through. That is a great thing, and eventually, you know, this gap is likely to get filled in the future, but we're not so concerned with that gap right now. Right now, we're all worried about hitting these all-time highs, and that's where we're at. Now, that's on the S&P 500. Of course, the Dow Jones Industrial Average is already at all-time highs, and this has had a nice bullish trend channel that it's been digging into. Lots of positive movement here. A little bit of a consolidation. I mean, even this range, look at just this bar almost encapsulated the entire range here dating back to the beginning of June. So still creeping up towards the upside. We had an all-time high yesterday, intraday. Have come back from that a little bit, but still good. And as long as earnings season goes all right, things are going to continue to be fine. Now, tomorrow, it's going to be all about the financials, so keep an eye on this ETF, XLF. So this is going to be the financial sector pretty much here. So a lot of banks reporting tomorrow, including JP Morgan and Citigroup. So expect to see lots of movement here out of the financials. This is looking pretty good, though. Nice little rally. Again, we're in a positive trend. Expect this to keep on creeping higher. Some bullish activity there in the financials underpinning the market right now. Now, what used to be basically the best place to have your money in tech has come under some pressure since that famous Tech Wreck Friday, like I like to call it. Still, you have a longer term trend channel here, and if I zoom out a little bit, you can see a little bit more perspective here on this trend channel creeping up there. Of course, my mouse ability here is not the greatest, so let me go ahead and draw an actual straight line for you so I'm not fumbling through here. There we go. You can see where you could say, okay, well then fine, this is going to be the new trend channel, right? The 50-day typically provides support for the market when it comes down. That's exactly what you saw here on the Nasdaq. If you zoom in a little bit further, a little bit closer here, you can see bullish behavior on the Nasdaq recently after it came down below this 50-day moving average. This is what I like to call this little rope-a-dope. It's these stop grabbers that take place where they force the market down below a major moving average they know everybody's looking at, and then ultimately the buyers come in and push it higher. This is great because I thought this line in the sand here, the 6107, I was worried about, and the market tried to force it down below there, and it really didn't work. Now the next step of support there was all the way down at 6,000. This is held in the short term, so this is good, but we're not out of the woods yet, because if we don't get above this level here, sort of the 6,300, obviously there's pressure there, and then the Tech Wreck highs at the all-time highs, which, looking at it right now, as long as we have bullish earnings here coming up, I don't think it'll be a problem. But that's the thing, this can change on a dime. You know, a down day tomorrow, and then all of a sudden this is a triple top, a descending triple top that doesn't look so hot, right? So this could still be a downward channel that's developing, and we're still kind of getting into the top of that downward channel. So just like it likes to do that rope-a-dope below a level and then come back up, it does it to the upside too. So you got to be careful. One place that this was evident was in that dollar yen, and I can't remember if I said this on the other day, but I just want to illustrate this for everybody. And again, you got these downward trend channel that developed on the dollar yen, okay? And then the yen pushed higher above it, but then managed to get back down below it. Now, granted, it went along the trend line and then eventually found support, but lo and behold, this level failed today. So dollar yen could not get over that 23.6% fib extension, the 114.60s. You have an overbought commodity channel index, and it's failing here. If this continues, then you're talking about 108s on dollar yen, and this is in fact a risk off pattern. Now, granted, the market's kind of been ignoring the risk off and risk on signals from dollar yen, but it's still important to note that this could end up being another leg down for the yen, so keep a close eye on that. Okay, now that we've got some macro views, let's go ahead and take a look at a few of these individual stocks. The first, Aerovironment. So these guys do drones, okay? Unmanned aircraft systems, but they also are starting to get into the electric charging business. That's right, for electric cars. They have a network now they're working on. So recent earnings report took this thing skyrocketing up towards 40, but look at here though, these lows are higher and higher as it's pressing up against 40. We could be in for another leg higher here. So I think I would pretty much, I mean, you could go along anywhere here. 40 is that level. I can play a breakout of the $40 level, but then my stop is going to have to be in here somewhere on one of these days. I'm thinking maybe this low here underneath this 38 level, because that was the last retracement, sort of took us down to there. That's one way to look at it. So that was Aerovironment, ticker AVAV. And again, a Zacks Rank #1 strong buy. So there has been some solid earnings estimate revisions to support this move. Then we have good old Alibaba. Everybody knows Alibaba, and these guys have been on a fantastic tear since December, really. And this trend just doesn't stop. You got a huge gap up on earnings. Stock retraced a little bit, but not much, and then has continued to go higher, plowing on through to 52-week highs, all-time highs for Alibaba. Now you got the stock pressuring 150. Commodity channel index is very overbought here, so that's something to keep an eye on. But overall, pretty bullish move here for Alibaba. Zacks Rank #1 strong buy, ticker BABA. Now a little bit low tech. H&R Block, that's right, good old tax preparation, but they've been on a pretty good run here as well. Another nice gap up on earnings, and now are starting to form this wedge just underneath this $32 level. So you're hoping that the momentum can continue here. Again, we got a commodity channel index well overbought. What I typically look for on an extension or continuation pattern is this CCI to come down to the zero line and then bounce when the stock's near 52-week highs. I've seen that a lot. It's something I play in Momentum Trader all of the time. H&R Block is actually in Momentum Trader, so it's definitely something I'm looking to break even higher right now. That's H&R Block, ticker HRB. Then another goodie that I have here is Square. So these guys do the mobile payment and POS point of sale services. The little Square reader, so you can think fintech, I suppose. And they've basically got shot out of a cannon in early November with shares down at $12. Maintain this very positive trend with the 50-day moving average providing plenty of downside support even in February when the stock came down there. You had an oversold CCI here to start July. May have missed it though as it crossed through the zero line, giving a buy signal. Also, it's a little pattern where you have lower highs and then boom, that gets carved out, or they explode rather on through that. So that's very good. And then if you look at these money flows, very positive throughout the last couple of months here. So there's been steady accumulation in the stock, decent volume, looking good. And again, support here, you can tell by the horizontal histogram of volume that a good chunk of this volume's come out at $24. So if you're looking to get long here and buy the breakout, stops underneath $24 provide a nice little risk versus reward. That's Square, ticker SQ. The last one, oh man, I'm almost reluctant to show you guys this one. I didn't want to have to show you that, as my father used to say to me when we were shooting pool and he was showing me trick shots I could never make. TAL Education Group. So this company does after-school tutoring services in China. A huge run from December up to above 130. Some volatility pulling back, but look at how each time it pulled back to the 50-day and found a bid, and the buyers ultimately come back in, and that's what's happening here again, is buyers are stepping in, buying TAL Education Group at all-time highs in the hopes that it just continues higher. And again, it's a Zacks Rank #1 strong buy, so this move is supported by EPS estimates pushing higher. That's TAL Education Group, ticker TAL. All right, everybody, thanks so much for hanging out with me here on Dave's Daily Dive. Remember to follow me on Twitter at Bartosiastics. That's at BARTOSIASTICS. Have a fantastic weekend, and I will see you all next week. Have a good one.